What's up YouTube, it's your favorite boy Fozal Tips, and I'm back with another video. You already know when you see me on your screen, I'm always coming with tips. I'm bringing you another tips that will elevate your life, like these tips that I'm about to give you to step up your game. So let's jump into it. Today we'll be talking about 5 things you need to start doing to become profitable in trading. Mark my word, these 5 things will change your mind forever. These 5 things will elevate your game, will make you look at trading in a whole different phase. These are 5 things that people let out, and no matter how you're good at technical analysis, you will never be profitable if you don't have these 5 things right. First, let's name them accordingly and then we'll explain them more detailedly. First, you have bias. Second, you have risks. Third, you have reward. Fourth, you have sizing. Fifth, you have positioning. If you have these 5 things correct, I promise you, no matter how bad your technical analysis is, you will become profitable. So dive with me, let's explain it more detailedly and tell you why they are so important than the other stuff. Let's talk about bias. What is bias? It's simply your instinct, your focus, what direction you want the market to go. That is very important. Sometimes, a lot of time, people come to the market without having a bias and they end up getting confused on what they are looking for. Like on this case, you come here and your bias is this asset is going to go, you're on a bullish bias, so your bias is bullish, so you will be looking for bullish opportunity. It doesn't mean that you should ignore bearish signs, but you're looking for bullish opportunities than bearish opportunities. So what will you try to do? Where do you want to look for your long opportunities? Whenever you feel like you have a chance to buy long, if you buy this right here at the current price, your bias is telling you that this asset will go up before it goes down. So what are you doing? You're looking to long only. So I don't know what your strategy is, your technical analysis is, whether you're buying at the current price or you're waiting for a certain price before you do it, which will explain to you guys so soon. But you have to be looking for long opportunity. But don't forget that there will be bearish flashes. Bearish flashes doesn't mean that you should change your bias. Sometimes the bearish flashes is only to give you a good long opportunity. That is very important. Once you have your bias, you go to the next one, which is the risks. Very important. The reason why I talk about the risks before the reward is people often come to the market without knowing how much they are willing to lose, focusing on only how much they are trying to make. This is what a lot of people get carried away when they come to the market, forgetting how much they are trying to lose if the price doesn't move in their favor. So this is something that you should consider, and that's something that I want to tell you guys. As a trader, you must learn to accept how to fail. Very important. If you cannot accept how to fail, you will end up failing a lot. Just like this, if you're avoiding small pain, you end up having a bigger pain. After your bias, check how much you're willing to lose. We are breaking it down small to you. For instance, look at in this case, this asset is currently at 133.6. if you want to buy this right here, and if this asset drops down to 128 first before it goes to your target, it should stop you. That's your risk. Means that if you buy 1 share of this at the current price and it drops 5 shares, you should stop. Your risk is only $5. That's the tolerance that you have. $5. How much you can afford to lose. You cannot afford more than that. So stop out. That is the best option for you. I'm not saying this is the best way for you to trade. I'm assuming you already have some type of technical analysis, some type of strategy before watching this video. I'm just giving you this stuff even if you don't have a profound setup and you just in the market just guessing, and you have this risk reward control and all of these 5 stuff that I'm talking about, you will be able to be profitable. Now explain it more and I'll show you how you'll be able to make money more than somebody that has the best TA but they don't have all this stuff that I'm telling you. So your risk tolerance in this case is only $5. And now let's go to the next one, which is the reward. After the risks, you calculate how much you're trying to make. So if you're risking $5 on this share, what are you trying to make? In this case, it will be very important for you to understand that if you're risking 5, you should make at least what you're risking. It's said that sometimes, even if you don't have a TA, you're just guessing and you don't even have a profound setup, and you could be 50% right almost all the time. So look for at least 1:1 reward. If you're risking $5, try to make at least $5. But most cases, you should make at least $10. So in this case, you want to adjust your reward to at least 2 of what you're risking. Given that you have a defined strategy that you're using, you're not just guessing. Even if you're guessing, this will still work if you manage all this so well. So you're risking $5 and you're trying to make at least $10. That's reasonable. People often get confused why risk reward ratio is very often important. Now, after you've managed your reward, the next thing that you'll be looking for is size. You're looking at size. In this case, it's very important because a lot of people don't know how to size their position. A lot of people come to trading with money that they are not comfortable losing, and they come into trading with the purpose of flipping their money without having a strategy on how to flip that money. The goal is to make money, but the goal is not to risk too much at a time and have nothing to try again tomorrow. Now, size is very important because if you have a perfect sizing strategy, you'll be able to make money no matter what. Let's say you came into trading with $100. That's the money that you're risking. Remember, I said every money you use in trading, you should be aware that that money is gone. Put in your mind that that money is a losing money. Don't have any plan about this $100. This is your trading account. You forget like it ever existed. Consider it like money that you've dashed somebody. But doesn't mean that you've dashed somebody now. It's still your money, but don't put no emotions into it. You're only humans. You can feel how the money is being acted. When it's in a trading account, don't use the entire $100 to open a trade because you've forgotten about it. You still have to manage this and size this. So this is a strategy that I use and I've given a lot of people and work. This is your account size, $100. Inside this $100, take 10 trades. Each of your trade is $10. Remember, you were risking $100 and you've forgotten about it. But now, when it comes to sizing, you are not using your entire $100 to open a single trade. You're using $10 to open a trade. Inside this $10, what was your risk? $5. So you should only lose $5 inside this $10. So if you're buying a share, probably with leverage, you're buying 2 with approximately maybe 30x leverage. Given that your invalidation is all the way down here, your risk is all the way down here. So only buy one of these assets. If in case this asset roll up and come down here, you lose only $5 of this $10. Now, if this trade goes in your favor and it goes up to 144, you make an extra $10. With that $10, you flip your position size. You've made an extra $10 with $10. Now your account size is now plus 10. You see how you're sizing, you're growing, but you're growing small, which is very important. You don't want to risk your entire $100, even though you've forgotten about it, just to try to make another $100, which you also stand a chance to blow it up really fast. A lot of people get carried away and see that if I use $10 to make another $10, why couldn't I use $100 to make another plus 100? Sure, you could have done that, but what were the chances that you don't make that $100 high? Nothing is for sure until it is done. You could have made that $100, but what if you would have lost like half of it? Will you be able to open a trade for $100 again? No, because your account size is only $100. Remember, if you would have used $100 and buy this share right here, it comes down here, instead of you losing $5, you lose $50. Now, instead of you to be able to trade with another $100, you won't have another $100 because you've already blown half of your money. But if you use only $10 and open a trade and you still have a chance to fight again another day, you'll be able to open 10 of these trades. So if you open 10 of them and you make $10 each, you flip your account to plus $100. But you also have the chance to lose up to 10 times before losing $50. But if you ignore it and use your total account, you would have lost $50 with just one trade. In one trade, which is a very bad strategy, given that your total account size is only $100. So you only use a portion of it. And inside that portion, you only risk a portion. Don't risk all of that portion. We are talking about somebody that does not have a strategy. If you have a defined strategy, you should know where your invalidation is, you should know where your stop is and your target is, which is coming back to the last but not the least, which is positioning. Very important. Given that you have all of what we've said in place, like we say, your bias was bullish, so you're only looking for longs, but doesn't mean that you should not long anywhere like you just did here. Doesn't mean that you should just click and long there because you're looking for longs. No, you have to check where you have a reasonable entry and target and stop, so that you will have a potential high reward trade. So positioning is very important. For instance, if you have done your analysis and you feel like your next point of interest is down there, since you want to be looking for longs, now this is POI, meaning that this is where price should bounce next. Maybe wait for it to make a new high there if that is what you're trading. If you feel like price will come there, if price come there, where next do you want to long? You want to position yourself in a good area, given that you have a technical strategy that you've really backtested and you know what you're doing. But if you're just guessing, again, like I said, you could just guess right there, maybe measure where -$5 will be, which I don't really advise that. You have to have some type of structure invalidation, where if the structure invalidate you, that is where you should stop and where you should target. You shouldn't just be focused on making money. But this was the whole point of the video, that you can even still be profitable without having a defined strategy if you have these 5 things right. Now, once you have figured out where your point of interest is, you want to make sure that you have a better entry and a better stop, so that your risks and reward will align so well. So for instance, let me show you how instead of buy one share of this asset, you should be able to buy multiple shares for a lower price and make your $10 really fast. You don't want to long up here, the price is already too close to this target. That's just a strategy that I'm giving you. You want to wait for price to come back to your point of interest. After price must have come here and price already there, if this come down here, from here to the bottom of this box is your buying area. That is where you're trying to look for buying opportunities. Down here is cheap. And now, when it comes down here, even at the positioning, it all depends on you as well. Sometimes I always love premium. Premium meaning that I buy at the third quarter of my box. When I draw my box, I buy at the third quarter of that box. And where do I stop? My invalidation is clear, tiny bit below that box. If I buy at the 3/4 of this box and I buy like maybe 10 shares here at 128.7, and my stop should be just a little bit down at also 127.9. That makes sense. So this is for even a higher reward than somebody that is looking to just do a one-on-one risk reward ratio, or a 1-on-2. This is a much higher one. So since we want to make a reasonable strategy and want to make a reasonable trade, you don't want to be looking for too much. You want to just look for your own and get out of the trade. So this is how you're positioning yourself. You're buying very cheap and you're selling away way close than somebody that's waiting for it all the way up there. Maybe they bought there, but from here, when you buy in here, you make at least 2 times of what you're risking, and you have the high probability that your trade gets play out faster. Okay, now you can buy 5 shares of this product right here. When it comes here, you can use your money, that your $10, you use a high leverage, and you'll be able to multiply that money to be able to buy you at least 5 shares of this Solana trade. And now when you buy 5 shares, if it drops down one from 128.9 to 127.9, it will stop you with your -$5. Remember, your risk was $5. Now if it comes to 131 first, you make $10. So you see how positioning is very important in trading. The same can work here. If, like, say you have a strategy where you're waiting for this thing to break out and it break out really right there, and just use the same strategy like I was saying here. You bring this here and you buy this and you stop below that green candle. You target that. Is the same stuff, right? Whichever one goes to first, you make $10 and you risk $5, but you should be able to make money regardless of what. Yeah, the only difference between you is just that probably you're just guessing that somebody that already have a strategy and they know exactly where they want to buy, but you're just guessing. But if you have your risks, your reward, your sizing, your positioning and your bias right, you'll be able to be very profitable than somebody that has the best strategy in the world. So tell me what you think about this video, guys. And if you want me to make a video about trading strategy, different 5 strategy that you can use to elevate your game, leave a comment down below. Let me know what you think about this video and encourage me by liking, sharing, subscribing. When you do that, YouTube will know that people are loving this video and they will share this to a lot of people like you. So keep supporting your boy, keep sharing the love, and I appreciate you guys so much. See you guys soon. Peace. Stay safe.